Good morning. It's Friday, March 22nd, about 5:30 a.m. Central Time. All right, the precious metals are weaker after yesterday's outside bearish reversal and key reversals in the charts. Looking at the April gold market, it's down $16 at 21.68. May silver down 23 cents at 24.77. May copper down 4 at 4.01. April platinum down $7 at 9.06. July platinum down $7 at 9.15, and June palladium down $7 at 10.13. So a lot of sevens across the board. Looking at the gold and silver ratio, that's at 87 to 1. So the industrial metal complex is losing momentum and losing ground against the gold market, which is slowly bleeding off. That's why that gold silver ratio is slowly rising. I believe yesterday, and I saw some warning shots fired that we were most likely going to see a correction. It was the surprise rate cut by the Swiss National Bank, while the Bank of England also will likely cut rates for the first time in August. Looking at the composition of the dollar index, the British pound makes up an 11.9% basket against the dollar, and then also the Swiss franc 3.6%. You combine these two, it's 15.5% of an inverse relation against the dollar index. The collapse in the Swiss franc really started to fuel the rally and get it going. And then it was the outside bearish reversal in the British pound that started to push that dollar index up. The dollar was able to build on early strength and finish near 1 month highs. Looking at this morning, the dollar index continuing to build momentum to the upside, up 39 ticks here at 104.06. I joked with my colleagues, what if that was the low in the dollar index, and the dollar index is going to travel higher from here to some absurd numbers like 104 and 104.50. Here we are the next day at 104. So transitioning to the metals, after the gains we saw post FOMC, both gold and silver became vulnerable to long liquidation, followed by sell stop triggers being hit and also profit taking. Anytime you get almost any commodity, any stock, any asset class near all-time highs, it tends to grab attention, and that attention sometimes becomes profit taking, followed by long liquidation if you're not near those highs, followed by stop loss placement from the euphoria and the YOLO people that are getting in at the tail end of the move. I had a lot of people calling up trying to buy gold and silver on that breakout near all-time highs. They put stop losses in, and what happens is you get the chasers, you get the stop losses getting hits. Now, I suspected that we could come under some additional pressure here today on the long liquidation because of the technical chart patterns that are in place. Looking at the depth of the sell-off that we could see, the Fed still maintains 3 interest rate cuts in 2024, according to the median dot plot. They cite higher growth, lower unemployment, slightly higher core inflation. As long as we can maintain lower real rates, central bank buying, and retail demand, the depth of the correction should be somewhat shallow. We can also see some geopolitical hedging as well here, as some people are still focused on the conflict in the Middle East and a broadening of these different things. Now looking at specifically the gold and silver market, so you did have a gravestone as a technical pattern here on the chart. It's where we go up, we make that new contract high, and we close lower on the day. The following session is what really dictates and cements that, and it is this weaker sell-off here today that we're seeing that will firm that in place. Your line in the sand on the gold still, like I said, 21.50 to 21.45. I think that's a key level of pocket support. We get a close over 21.45, below 21.45, and no upside momentum the following day right away. It could really open the doors for an exhaustive sell-off down to 21.04.5. That would take the gold market back to a neutral trend. 2077 is going to be your 50-day moving average. And transitioning to the silver market, we had broken below that breakout point, which was 24.91. It was an outside bearish reversal on the silver market. That's where you make a higher high from the previous day and you close lower than the previous day's low. You open that next chart pattern higher on the day today with a weaker sell-off here. It doesn't look very good at the moment. So remember, you want to look at some things like What's the average true range on the market? Something like silver, 60 cents. Something on gold's like $27. You get moves to things like all-time highs on the gold market, and we're up $50 and above. That's 2 times the average true range, and also we're at the all-time high. That justifies considering taking some of those positions off at those levels. Now, some of the metals I'm going to be watching, platinum again below the $900 level. We've welcomed that as being oversold many times. The copper market back below $4. We think structurally the copper market and other colleagues and other companies out there, places like Goldman Sachs, Morgan Stanley, Bank of America, all believe that the copper market is one of your best places that you could have exposure to. On the wealth management side, we added Southern Copper as a core holding for our clients here. And then shifting to the equity markets, the equities really look quite susceptible, and tactically I think we're starting to add some small bearish put protection on the S&P 500. You have Apple facing $112 billion being wiped off the table on its market cap here yesterday on an antitrust lawsuit. You also have Google facing lawsuits, stocks like Nike and Lululemon under significant pressure in the morning hours. Crypto market cap gave up 2.3% yesterday, and we're seeing Bitcoin not able, just really a mess, not able to capture the 69,000 and above that we need here in order to get the bullish momentum going back higher. So if you got any questions, give me a call if you love to discuss any of these things a bit more. I will be writing an article on Kitco here today. I'll also post the Zero Hedge, and then additionally I'll be on the Schwab Network at 2:40 Central Time talking with Oliver Rednick as far as some of these moves in these commodity markets. So got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trade.